Hi everyone and welcome to our YouTube channel. In this video, we are going to talk about the crypto versus stocks, which is better. So before starting this video, please like this video, and subscribe to our channel for future updates. Crypto versus stocks. Which is better? For an investor there are critical differences between investing in cryptocurrency and investing in stocks. However, as a threshold matter, it is important to understand that this article is merely a brief introduction to the issue. You could write volumes on the nature of crypto versus stock investment, and people have. However, a few of the most important differences are: diversity. Both stocks and cryptocurrencies offer thousands of potential investment opportunities. At the same time, various cryptocurrency marketplaces offer between 10,000 and 12,000 potential cryptos. This number changes rapidly. However, these markets are not necessarily as diverse as they appear. At any given time, somewhere between 55% and 70% of the entire cryptocurrency market is tied up in Bitcoin. That said, stock markets shouldn't get too proud of this distinction. While no one stock dominates its market, there are similarities in the FAANG stocks. These 5 companies, Facebook, Apple, Amazon, Netflix and Google, make up roughly 1/5 of the entire S&P 500. It isn't the dominance of Bitcoin, but investors should be aware of similar market capture dynamics. Volatility. Cryptocurrency is likely the single most volatile asset in which you can invest. This is true of both individual assets and the market at large. Whether you have purchased Bitcoin or an altcoin, individual stocks almost always have far less volatility than cryptocurrency, but they're still not stable. In fact, until crypto came along, shares in a single stock were generally considered the most volatile investments you could make. If you want a stable asset, an S&P 500 index fund is usually a safe bet. If you want a speculative asset, an individual stock is a good choice. If you want an extremely volatile asset, crypto can serve that role well. Profit source. You can generally profit off of stocks in 2 ways. First, you can make capital gains by selling your shares to another investor for more than you paid. Second, you can hold the stock and collect dividends if the company behind the stock chooses to make dividend payments. You can only collect profits off cryptocurrency through capital gains. This makes cryptocurrency somewhat more speculative than stocks tend to be. Trading and regulation. Like all securities, stocks are some of the most heavily regulated assets that you can trade. Cryptocurrencies do not yet have any kind of centralized exchange system. This makes cryptocurrency a generally less liquid asset than stocks. Scams. Cryptocurrency remains largely an unregulated asset class, as bodies like the Securities and Exchange Commission and the IRS decide specifically how to govern it. The bottom line. So, which asset should you invest in? Cryptocurrency is an exciting, boom and bust asset that has attracted an enormous amount of interest in a short time. Individual stocks are linked to the performance of an underlying company, which grounds the stock's price. These are still volatile and risky assets, but not nearly to the same degree as cryptocurrencies. Thanks for watching.